Hey traders, welcome back to my channel. My name is Desmond Samuel and I am back with yet another episode of my weekly Forex Forecast. And as we look to round up the year, let's just talk about a few pairs. So the first pair on the list now is the euro dollar. And so speaking about the euro dollar here, we've seen some form of breakdown here. So if you look closely, we have been in a downtrend, and then for some reason we just came and then stored here, and then we're starting to break down all the way back down below. All right, so if you look closely here, we kind of like had like a peak above this point when we came into the supply level here. And if you really want some in-depth breakdown on this pair, you can actually go to my most recent weekly forex outlook. All right, so scale it down to the daily time frame. This is how things look on the daily time frame here. So we have failed to break above this weekly high, somewhere around this high here. And then what actually happened was that we actually broke back down below the supply level, and then we actually gave an engulfing daily engulfing bearish pattern, a candlestick pattern here. So now what we're actually waiting for here is just very simple. We need to see the market pull back into this point here, and as you can see, this is already starting to form some form of a reversal chart pattern here, where it's starting to point to the upside. All right, so like I said in our previous weekly episode, our prime target remains this bar here. Once you see the pair, the euro dollar pull back into this yellow bar right here, we have enough room. Okay, so it's just very simple. Once this guy pulls back, pending maybe next week, I'll be here to let you guys know what's going on. Right? But as far as the euro is concerned, provided we remain under this yellow bar here, I'm actually very bearish on this guy. And then if for any reason we actually fail to sustain below this yellow bar, then we start to spike above here, then I'll have to reconsider this whole setup. Right. All right, so the next pair on my list now is the pound dollar. So the pound dollar also has a very similar setup to that of the euro, and as you can see, both pairs have actually broken back down below a very decent supply level. And what we are actually currently waiting for now is just to see one nice pullback to that yellow bar, then we can actually see this guy continue to the downside. All right, I see no reason as to why this should not happen, because the market just came right into a very solid demand level somewhere around here and started to reverse, as you can see. So the market is actually reversing all the way back to this yellow bar right here. Okay, so for those of you guys who actually like to trade the lower time frames, I actually advise you wait, because the highest probability trade happens around this yellow bar. So you should actually be patient enough to see this guy pull back deeply into this yellow bar before actually continue all the way to the downside. All right, it's very simple. We pull back in here, we look for a decent bounce or a counter trend and break before actually collapse this guy all the way back down. All right, so that's that for the pound sterling. I am actually still very bearish on this guy, provided that we stay below this yellow bar here, and then this pullback is completed. I see no reason as to why we shouldn't collapse further on the pound sterling. My prime target remains this blue bar right here. So like I said earlier, we have about 800 pips to go on this guy. Yeah, 830 pips precisely to go on this guy. So that's just that for the pound sterling here. So the next pair on the list now is the Aussie dollar. I had highlighted the Aussie dollar to the downside for quite some time here, and I'm just gonna go straight to the point on this guy here. As you can see from the weekly time frame, had a very decent descending trend line. We have the first touch, second touch, this is the third touch somewhere around here, and scaling down to the daily time frame here, the market just needs to do one thing. All right, just needs to pull back into the yellow bar right here, give us a decent entry confirmation, and then we can actually go ahead to short this guy. All right, so for Aussie dollar, I'm still waiting for Aussie to do what it has to do. All right, so for those of you guys who are actually looking to buy this guy, I do not see the reason as to why you want to buy this guy at this point, because anything could happen. However, I would advise you just wait for maybe a break above here. All right, so a break above here and some form of pullback will give a decent opportunity to this yellow bar right here. However, I would advise that you wait, because the highest probability trade always happens around this pullback here. All right, so we had like the first pullback and we have the second pullback, and currently what we need to see is the third pullback. We have the first, second, the top pullback always does the trick as far as the market is concerned. So in that case, I'm waiting patiently for the Aussie dollar. So on our hands, we have the euro, we have the pound sterling, we have the Aussie dollar pulling back nicely. As far as NZD CAD is concerned, things are looking quite bearish at the moment, because we're actually broken back down a very decent supply level here, and you guys know that after a break and retest comes a third pullback here. So we have the first pullback, second pullback, then this is the top pullback here. And as you can look carefully from swing high to swing low here, we need to see the market pull back into this level. Then once this market pulls back into this level, we have enough room to the downside. All right, so like I said earlier, you guys just need to be patient with the market, be patient with the market, and with the whole holiday season coming around, you have to be extremely careful with the market. Right? Be patient. At the end of the day, the market will always test it before it gives you what you want. All right, so patience. What we need to see is just a pullback to the zero bar here, and we'll collapse the NZD CAD as far as this bar holds. Next pair on gold. So the next pair on my list now is gold. So gold has every technical backing to head higher, and also for fundamental backing to head higher. All right, so for gold, I am still very bullish on gold. We had a decent dip around this point here because this was the supply level. Now let me explain what happened here. So for those of you guys that watched my video and thought that I lost money. So this is what happens. This is a supply level. Definitely speaking, the market will always, and this was a demand level. The market will always pull back. All right, pullbacks are normal. The market, this is not. Forget about the fact that gold has been in on a very steep bullish trend. All right, the market is not linear. You always go in wave pattern. So this, as you can see, was a supply level here. The market simply reacted to the supply level, and as you can see, even the pullback does not overrun the overall trend, which is bullish in this case. All right, so I'm still bullish on this guy. However, this pullback here didn't change anything. He just market fulfilling technical criteria, right? So it doesn't matter even if you're in a trade and then you're in a winning trade, and then for some reason the market just pulls back. You need to give the market time, and you need to also look closely what is the market trying to do. In most cases, the market is just trying to fulfill some technical criteria or some technical principle. And one thing that you guys don't understand is that the same principle that plays in your favor will be the same principle that plays against you. That's the thing. Principle, you cannot be sentimental about it. If you're bullish in the market and you see a supply level as you're headed bullish in an overall bullish market, then if for some reason you see a supply level, expect the market to go there and react. The market is always going to react. To always react. All right. So as you can see here, this is a supply level here. The market came into the supply level and then simply reacted as it should. All right. You didn't change the overall trend. The overall trend is still very bullish. Are you telling me that this basic supply level pullback here is going to overrun the entire trend? Come on now. All right. So you guys, you need to be extremely careful and then open your minds up to learn. All right. So as far as gold is concerned, I'm still bullish on gold. All right. Very bullish on gold. Prime target remains $3,000 per ounce. However, we have to get through 2,790 first. Okay, so the market just came to play with demand here, and then this was just a very normal reaction off of supply level. It's very simple. All right, so in this case here, gold is still very bullish, and into next week, moving into next week here, you guys have to. So for those of you guys who do not have any opportunity on gold here, so you have to just wait for that deep one. That once you get that one leg down, if at all you get a one leg down, we should actually continue higher. So once you get that one leg down here, you should that's a cue to go long on gold. Gold remains bullish all the way to $3,000 per ounce. However, we have to get through 2,790. All right. So the next pair now on my list will be silver. Will be the most I didn't want to talk about now. So for silver has been very what I say very I wouldn't say slow, because I mean at the end of the day it's just fulfilling technical criteria, like I always say, right? But for silver, we are actually still headed higher on silver. Long story short, here we had an opportunity to experience this was an impulsive move. First pullback, second pullback, then continuation. First pullback, second pullback. All right, in this case here, so what's happening here is very simple. All right, this is a breakout retest that's currently happening around here. Okay, so long story short here, this is the first touch, second touch. The market is currently experiencing a third touch of a trend, and this is very delicate. The market is currently at a very delicate point, very delicate. Now, for that case now, yeah, we have a few things to note before we actually execute this trade as per entry. All right, so you need to watch closely. What is the area that the market had issues breaking to the upside? Since in this case you're looking to buy, so in that case it's this high here, right? This is somewhere around here. So what you need to do is very simple. Once you're about to execute this trade, you have to go down to the 4-hour time frame and wait and see that the market, ensure that the market breaks above $31 per ounce, per troy ounce for silver. The market has to come above 31 ounce here. Once you see that decent break above here, a bullish 4-hour engulfing kind of break into this point here will be a decent point as point for entry, and then at that point we'll go ahead to execute this guy. All right, it's very simple. We have to see the market break above $31 per ounce, troy ounce for silver here, and then entries will be made. So you can see this was a supply level here, so the market has to break above it, then give it that decent pullback here, and then you can actually go ahead to buy this guy. Prime target remains $35 per ounce, but I do see a potential of this guy rallying higher even on to $48 per ounce as far as I'm concerned. But first of all, we have to get through to $35 per ounce, and then give us some form of hope, or some form of hint or any signal that this guy is going to continue higher, and then we can actually go ahead to hop on more opportunities to the upside. All right, so that's just that for silver. let me quickly touch on some of that pair before I actually call it a day. So for S&P 500 now, it's very simple. S&P is going to have to create another demand level, and in this case, we just have to go with the flow of the river. All right. So instead of banking on seeing one big drop here, which is not looking like it's going to happen anymore, instead we should actually look at 5,860 basis points for. So instead, we should just go ahead and bank on the market pulling back into 5,860 basis points for the S&P 500. All right. So my prime target remains 6,400 basis points. However, I have to see the market pull into 5,860. All right. So it's just very simple. It's the exact same laws of demand and supply. All right. Once market creates a demand level, it has to come and test it. All right. So as is confirmed and created a new demand level here, I wouldn't necessarily expect you to start looking for buying opportunities right around here. I'll let the market pull back into 5,880 region or somewhere around here, and then you should look to buy this guy all the way to 6,400 basis points for 6,400 basis points for the S&P 500. Let me see if I have other pairs to quickly touch on the US30 also. All right, so for US30, it's the exact same thing here. US30 has to come into that 43,000 basis points. All right, 43,000 basis points. So the US30 has a exact same thing. It has to come into this 43,000 basis points here. All right, we need to see the S&P come back into. Sorry, the US30 come back into this point here, and you guys know that one way to trade the Nasdaq and the US30 profitably is to mirror the S&P 500. So we need to see this guy pull back into 43,000 basis points. Once it's said and done, we have space all the way to 47,000 basis points. All right, I see no reason as to why this should not happen. It's very simple, very easy, straightforward. However, just be mindful of this guy here. All right, so just wait for the guy to pull back into 43,000 basis points, and when that's said and done, we should actually go ahead and then buy this bet to the upside. All right, so to round this up here, let me talk about the USD CHF. So USD CHF also has a very decent opportunity to the upside. And with the breaking out of the dollar has actually come a very nice buying opportunity for this pair here. And judging from the weekly time frame, the market came on here to create a double bottom here. Okay, and then in between this range from this point to this point here, we have levels like demand levels and supply levels to play with. Now, scaling down to the daily time frame here, what we need to look out for is very simple. The market has to pull back into the demand level somewhere around here for the USD CHF and give us a decent bounce. You can see that this was a very solid level because the market actually bolted it away from here. So what we need to see is very simple, and this also coincides with my Fibonacci tool. The market has to come and pull back into the 0.5/ the 0.618 region somewhere around here, and then give us a decent buying opportunity like the 4-hour engulfing candle or a counter trend line break. Once that is said and done, we have enough space to the upside that we can actually go ahead to buy this guy. All right, so prime target remains this weekly high around here, this green bar right here. All right, so that's that for the S&P. For the USD CHF, guys, I know what's wrong with me and S&P. All right, guys, to round this off here, to bring this to a close here, we need to see talk about the dollar index here. So for the dollar index, the XY, we actually need to see the market pull back into 104 regions, and we should see this guy continue higher because on the weekly time frame we have seen the market significantly bolt away from these two levels around here, which happen to be demand level. All right, so for this case here, what we need to see is very simple. The market has to come in here, and then because it came on here, then gave us two significant reactions off of it, which happens to be double bottom in this case here. All right, so what we need to see is very simple, and for the dollar index to continue higher, we need to see the market come into the 104 region. So once the market taps into this 104 region here, we have enough space all the way to 115. All right, so that's that for the dollar index. It's very simple. Should this bar hold at 104, we will definitely see this guy rally all the way to 115. And with this guy rallying all the way to 115 comes the collapse of the pound, of the euro dollar, the Aussie dollar as well. All right, so that's just that for this price. All right, so and if you found value so far, be sure to click and subscribe to this channel.